Stocks that carry a $0 debt on their balance sheet are highly sought after, especially when we have fears of a recession possibly looming. In my previous video, I went over 3 stocks that had $0 in debt. If you haven't checked that out, make sure to check that out. And I challenged you guys to get 200 likes on that video if you want to see another video with more stocks with $0 in debt. Well, clearly that challenge was way too easy for you guys because you well surpassed 200 likes. So as promised, this video is going to cover 3 more stocks with $0 in debt. So now for this video, I have a new challenge for you guys with a little twist here. So if you guys get 400 likes on this video, the next and final video in this series will be 4 more stocks with $0 in debt. And if you get 500 likes or more, then we will cover 5 more stocks with $0 in debt. So now it's up to you guys. The ball's in your court. Let's get those likes rolling in. So once again for this video, I picked 3 companies in 3 different sectors to give you a wide range of options to research further. The first is a semiconductor play, the second is a retail play, and the third is a food play. So without further ado, let's get into it. Stock number 1 is a company called Skyworks Solutions, ticker symbol SWKS. Now when we think of semiconductor stocks, the most popular ones that come to mind are nvidia and AMD. However, this sector for semiconductor stocks is massive and there's a lot more other stocks out there. And this company right here, Skyworks Solutions, is a stock that I believe has very good potential moving forward, especially as we go into the 5G revolution. Just hopping on their website, the first thing you see is 5G, so it's clear that's where their focus lies right now. Every single piece of electronic in the world has components like amplifiers, filters, diodes, and more. And there are a few companies that create these components, Skyworks being one of them. A lot of these components are critical to 5G infrastructure and electronics, and as other companies like Ericsson build out the networks, companies like Samsung build out devices to support these 5G networks, and both these companies are going to turn to Skyworks Solutions for components to source for their equipment. Skyworks also has an impressive list of customers that they serve. They sell to many different markets, making this a very well diversified business. Now as 5G continues growing, it will eat up a massive chunk of the market, making it a big catalyst for many companies, not just Skyworks. And as we get closer and closer to a full adoption of 5G around the world, there's going to be a lot of companies that come to Skyworks for their particular parts and components so they can apply those to their applications. Now as devices get more and more complex, Skyworks expect to grow their revenue per device north of 30%, resulting of course in higher profits for the business. So I think by now I've pretty much convinced you that Skyworks has a lot of potential moving forward in 5G. Let's take a look at their balance sheet here. From their most recent quarter, it shows that they have a healthy amount of cash and investments, totaling up to around $1 billion. As expected, their debt is sitting at $0 for short and long term. Jumping over to their smart score, we see a nice consolidated view of what's going on around the stock. For the most part, things are looking positive. The technicals are weak, but that is why it is at a good buying opportunity right now in my opinion. Insiders have been selling the stock recently, however, it mounts to less than $200,000 worth on a company with almost a $14 billion market cap, so I'm personally not too concerned here. Now looking at their earnings, despite them suffering a lot from the trade tensions, because they do actually get a good chunk of their revenue from China, the company has posted strong beats quarter after quarter, instilling confidence in the stock. They also pay out a nice dividend, which they are growing at around 20% year over year, so this may end up being a strong dividend growth company over time. Finally, the charts here for Skyworks show us that the stock has been extremely volatile for the last year and a half, again mainly due to the trade issues. But after correcting nearly 50%, the worst may be behind them. Here, and we may be looking to break to all-time highs soon enough, especially if we see a trade deal soon. I'm personally very optimistic on 5G. I think Skyworks has a good potential here to be a big player in 5G, so I'm going to be watching this stock closely, especially with their strong balance sheet. Moving on, the second stock on the list is ULTA Beauty, ticker symbol ULTA. So this is a stock that I actually recently made a video on. Again, if you haven't checked that out, I'll leave a link up here. And in that video, I actually explained why I'm personally not investing in ULTA Beauty right now. Now that could change in the future as I do more research and understand this company and industry better. But as of today, I don't hold a position in this company. So let's start off by looking at the fundamentals of this company, and then we'll see why this stock actually caught my attention, because it recently fell off a cliff. So ULTA operates retail stores where they sell beauty products from a wide range of manufacturers, and what makes them unique from others is that they also offer salon services in their store, differentiating them from some of the biggest competitors out there. But the real question that every investor is asking right now is, will ULTA be able to sustain this differentiation for much longer? That remains to be seen. ULTA currently sits with around $300 million in cash and investments on their balance sheet, with an expected $0 in debt for both short and long term. Now, this is not as much cash as Skyworks, but $300 million is still substantial to help this company during tough, turbulent times. ULTA's smart score here gives us a picture of how extreme sentiment has changed recently in the stock. Hedge funds are selling, insiders are selling, and the new sentiment is negative around this company as well. But maybe this is a buying opportunity in this stock to go against the grain and pick up some shares at a big discount. We may continue moving lower in the stock, however, it is at a fair valuation currently in my opinion, so we may not move too much lower. ULTA has been fairly consistent with their earnings as well, either posting in line or slightly beating for the most part. The concern, however, was that their latest earnings report saw the company miss, and they lowered guidance as well, which triggered this big sell-off. The stock has corrected near 40% in just a couple of weeks. However, it is clear that selling pressure is showing signs of slowing down. Buyers are slowly creeping back into the stock, and the price currently for ULTA has a PE of under 20, so it isn't exactly overvalued from that perspective. However, it remains to be seen how the next earnings performs, because that's what a lot of investors are waiting for now. Remember, the PE number of a company can change depending on what they report, but as of right now, investors are expecting them to report fairly poor numbers, which will keep this PE fairly elevated. If, however, ULTA surprises and posts very strong numbers, that'll drop that PE down even more, which will most likely trigger some buying in the stock. Now, before we move on to stock number 3, remember, if you haven't done so already, drop that like down below to see another video in this series. I know I'm asking a lot here, but trust me, 2 seconds of your time for that like will make it worthwhile for the next video. So stock number 3 is a food company called Chipotle Mexican Grill, ticker symbol CMG. So I don't really believe I've talked about this stock much on this channel, if at all, but this is a fast food chain that has had incredible performance in the last couple of years. Now, I personally believe that the valuation on this company is absolutely nuts. They have a PE of over 90 right now, pricing this like a high growth tech stock. But that aside, they do have a good balance sheet, and there is some good things around this company that I want to talk about. So Chipotle has picked up extreme popularity recently due to their healthy nature of their foods. The company promises to not use any preservatives and only use the freshest ingredients, so they completely hopped on the healthy food bandwagon here and has benefited from that greatly. Now, their balance sheet here shows that the company has over $700 million in cash and investments, with again $0 in debt, both long and short term. They've also been very consistent with their earnings, beating expectations quarter after quarter, and by quite a big margin at times. Their smart score here from TipRank shows us that the stock is generally healthy. However, there has been some heavy selling by insiders and hedge funds. And in my opinion, this does make sense because the stock is making new all-time highs throughout 2019. Remember, with a PE ratio of over 90, I would also personally be cautious here if I was holding the stock. So when I see selling from insiders and hedge funds, it does not surprise me in the least. Now here we can see Chipotle's stock chart, and throughout 2016 and 2017, this stock took a heavy beating with a lot of E. coli accusations, rats in the kitchen, and other negative press as well. But since then, the stock has gone from a low of $250 per share to a current high at just about $800 per share in less than a year and a half. Any investor who got into the stock in the 200s is up almost 4 times on their investment, so you can't blame them for shaving profits off the table here. Now, I'm personally not a huge fan of the company Chipotle. I've been to their restaurant a few times, and I'm not really too thrilled on the food, so it's not really a company that I've looked into before. But that being said, if it does drop down to a much more reasonable valuation, I'm talking PEs in the 20s or lower, that is when I would consider investing in Chipotle. So as of right now, this is not a buy for me personally, but that balance sheet is squeaky clean, and they do continue to beat expectations quarter after quarter. So there's no stopping the stock, and there's no real reason, apart from the high valuation, that the stock can actually go up and hit $1,000 per share or more. Guys, remember, 400 likes on this video gets you a third and final video on 4 more stocks with $0 in debt, but 500 likes or more will get you 5 more stocks with $0 in debt. Share this video with a friend, share it with family, get those likes, let's break a like record on this channel. But either way guys, I really appreciate you watching. If you enjoyed this video, comment down below, let me know which of these 3 stocks you would pick if you had to pick one. But either way, thank you so much for watching. I appreciate each and every one of you. The community is growing and I'm absolutely thrilled about that. Don't forget to invest positively guys, and I'll see you in the next one. Peace.